Yeah, so I hope that we have been practicing since the last time. It's been a while, so we still have been in the market. And so on this particular session, it's gonna be a brief one. So just wanna start it in a different way by uh, picking from the last session. You remember I mentioned that forex market used to be limited only to the wealthy individuals, private hedge funds, and also banks as well, central banks as well. Uh, Individuals like us used to be very hard for us to participate in the forex market because of the nature of this business. So a forex market requires you to have like a substantial amount of capital, and this you get to find as you're starting out in your forex career. This is not going to be easy, since most of the time you're transitioning, maybe from, you still want this to be a business that's bringing you that kind of income to support your lifestyle as well, and to do everything for you, like for the savings, also to support your kind of lifestyle. So I understand having that kind of capital to participate in the forex market when you're starting out, it could be a challenge. And that's why we have partnered with Myforexfunds. This is a proprietary fund that normally fund traders, uh, as you're going to see from my previous accounts, the ones that I've been doing on the challenges. So these guys actually get to fund you, whereby you do two evaluation step stages, whereby you are assessed whether you are consistently profitable trader, and then they get to give you their funds, and then you get to get a part of the profit that you make at the end of the month. So they have different packages depending on what you want to consider to invest. So depending on whether you want to get the live account immediately or during the evaluation, and these guys get to give you up to 85% profit split for the amount of profit that you make in a month. So quite a good deal when you want to scale up in this business. And again, I told you guys, to get to the first lane, you need a well-oiled vehicle, and be ready to put in that effort and that practice in this journey, because the only investment that you can make is in yourself and in this knowledge. I already given you the slides, guys, so I hope you've been practicing. So the only thing I haven't showed you is how to install those pivot points. So these guys get to give you, so let's take an example of a $50,000 account. You get to pay a small subscription fee of $300, and the amount of profit that you make on this particular account, you get to keep 85% profit in a month. So quite a good deal. You need to consider this. So did my challenges, got the live account for the 50,000 US dollars, and the profits that I've been making, you get to keep 85%. So quite efficient, quite professional when you want to scale up your forex business, and this is the way to go. So recently did two evaluations last week and this week, passed all of them. So you can see this is on the first phase, where you're required to make about 8%. 8% of that fund, the fund had given me $50,000. So you make 8%, that's $4,000. And then they give you the second evaluation phase, and then you need to achieve 5% of the profit. Already did that as well, 2,500 profit, and then now you get the live account. So quite a good deal when you want to scale up. So enough of this. I'll send you the link, guys, so that you can sign up instead of trading the small funds. Yeah, like instead of depositing $300 in your personal account, I'd rather you come and invest that one, get funded $50,000 so that you can scale up your business. So you need to build those habits that basically enable you to reach success in this particular business. So it's all up to you guys. So let's get right
Hey,
into it.
kudos. Kwanza naona hiyo graph yako iko sawa, yani imeenda tu. How did you manage it?
Yeah, so
Hello.
that's it, guys. So, and then you get to see, this is something that you get to achieve in a span of a couple of days. So quite a good thing when you have like the strategy. And it's the same strategy, guys, that I'm going to show you guys here. The same strategy that I've been using to get all those trades is the same strategy that I'll be impacting on you guys so that you guys can be independent traders. And we're going to see this live in the market. So let's go ahead and look at how now we get to on today's session. I want us to look at, okay, so I have admitted. So again, so welcome back. So I was saying, now on this session, I want us to look at the pivot point, at the support and resistance, so that you guys can be independent traders by yourself. I don't want you guys to rely on the signals. I want you guys to learn how to master these levels, pivot point analysis, support and resistance levels, and price action to actually get those trades the same way that I have been. The signals won't be enough if you want to have like that long-term success in this forex business. It's going to take time. You need to create that time and condition that time, like commit to that time during the day where you need to do those analyses and just be in this business as well. Doesn't take much of your time when you have like some good capital. Again, it goes back to the amount of capital that you have. Again, with these funded accounts, you get to see they also assist you to come up with a proper trading plan. So because again, you need to keep your maximum drawdown daily, drawdown less than 5% per day. So you need also to be very disciplined and have that proper trading plan, guys. So you need to develop that one for yourself. So again, so let's get right into it and talk about these support and resistance levels, guys. So in case you need to have any question just during the presentation, just unmute and I'll yeah, so just unmute. Since we are just a small number, it should be okay. So when we talk about support and resistance, guys, support and resistance based on our strategy, it's an advantage to us since these levels are actually given to us by these indicators that I'll be showing you how to install in a few minutes on the next session. So these support and resistance levels are actually think of resistance levels basically as floors above the market and support levels as the floor and resistance levels as the ceiling above the market. Okay, so basically that's what resistance and support levels are. So it's an advantage to us since these levels are particularly useful to traders for locating turning points in the chart. Okay, so again, when we talk about support, so these are useful for locating turning points on the chart, and this give clues as to the pressure that investors who are particularly involved in a particular instrument, such as the USD versus Canadian, the investors who are involved in this particular asset are facing. So you need to consider the magnitude of the movement. The magnitude, I mean the size of the candlesticks, the magnitude of these movements along these support and resistance zones. So pivot point analysis are basically support and resistance zones. And that's why we started with this section on the support and resistance before we go to the pivot point analysis. So support, this is area. So for our case, we have the support level 1, support level 2, and the support level 3. So we have 3 support levels and 3 resistance levels. And then the main pivot point analysis, which is the main support or resistance. So the support levels indicated to us as these are horizontal red lines. So this is basically areas where prices have shown a tendency to stop falling. So you can see we have the major supports, and then we have the minor supports. So for the major supports, to differentiate, the major supports causes the trend to reverse, while the minor supports causes the trend to have a pause. Again, you can see this pause here before the market went back up and then came back, broke, and then the prices actually break below this support level and head down to the support level, the maximum support level 3. Again, you can see this is a minor, this is a major support. This is a major support because it causes the trend to reverse. You can see the trend reverses from this particular moment. This is on the 4-hour chart. So you can see this is a major support, minor support, minor support. Minor resistance causes the trend to pause, just to pause for a little, and then the trend breaks beyond the resistance level 1. So that's what we have for the support levels. So again, we have major and minor. So a support level, basically, this is an area where prices have shown a tendency to stop falling. So this is perhaps because the bulls, okay, the bulls, those guys who are buying, they have decided that this is a good price to take a long position, and therefore they take a long position from these particular support levels. Again, or therefore, some buying pressure emerges from these particular zones, these support levels. And again, you come to see, or perhaps the prices have shown a tendency to stop falling since those guys who are actually selling, they have decided that this is not a good place. So maybe let me secure my profits as I wait for prices to go back higher so that I can get a better entry to continue maybe selling again. So for whatever reason, prices have shown a tendency to stop falling at this particular price. And that's why we're referring to this as the floor. Floor. Consider this as the floor to maybe to your house, the floor. Prices up on the mwisho. Again, we have the resistance level, the ceiling. This is the maximum level in the market. So resistance level, this is an area. Okay, so let's have a look at gold levels. Or yes, so again, I told you guys you need to look at the magnitude of the movement. So look at this magnitude, quite a huge candlestick on this particular pair. So again, the basic principle behind support and resistance is that you want to always ask yourself, you need the basic principle. So I told you guys to keep it simple and stupid, guys. That's how you win in this market. You need to buy support, you need to sell resistance. Just remember that. Just remember you need to sell resistance, buy support level every time. So yours is just to identify the trend. And we already know how to identify the trend from our previous session. A bearish market composed of lower lows, lower highs, lower lows, lower highs. That's a bearish market. So what you want to do in such a situation, you want to wait for these moves, throwback moves, pullback moves, so that you can place your short positions along these lower highs. So that's the basic principle. So you want to always sell a resistance, you buy support areas. So that's it. So for instance, let's have a look at some of the particular pairs on today's. Again, let's have a look at this. So this is USD Canadian. We had this particular pair, took a few pips on this. Again, if you're still holding this, then it's at a loss. But I want you to consider now looking at the support and resistance levels. Again, we had our short positions along these resistance levels. So we sold our resistance. Again, our take profit levels was along the support level 1, which we were able to achieve that. Again, if you were buying on this particular market, on this double bottom for this particular week, trading week, you see you buy a support area. So it's a double sub market such that market is always going up and down. It's a downward and upward movement. So if you're trading this particular pair, you sold the resistance and you came again. So the sellers actually decided this is a good place to place their sell positions. Again, prices come to a support level whereby now the bears have decided that I don't want to keep holding my positions, so I want to take my profit. So our take profit level was along this particular zone. We wait for a price movement again upwards. If you want, you can take another short position. Why am I saying this? Again, we are still in this particular trading range. You observe on this particular resistance levels. So you need to pay attention to those levels that have actually played a support or resistance in the previous sessions. So it uses the Bayesian information criterion. So so it is Excuse, sorry. Just a minute. Okay. So my fellow statistics intellectuals, again, it uses Bayesian information criterion since it is based on the previous time period data. So the pivot point analysis is calculated based on the previous or the prior time period session. That is the high, the low, and the open of the previous time period. So today's trading range on the pivot support and resistance levels is observed from the previous time periods data, that is yesterday. So we get the trading range for today. So we have the trading range, and you observe, for instance, these levels, the way they actually self-fulfilling for themselves. You can see for the USD card, if you are short, you want to short along the resistance level. If you're buying, you buy there, then you buy the support level. You observe this double bottom kind of formation. You see this kind of double bottom formation on this particular one. So that's it, guys. So keep it simple: buy, support, sell, resistance. So, okay, once broken, we can observe that an area that previously acted as a support. Okay, so let's look. So we see all right. So any questions? Okay, so
So, Kevo,
yes.
hello.
Mhm.
So there is something I'm also noticing today. So these pivot points, they are labeled.
Yes, they are labeled. So you can actually
Okay.
display how they are labeled by just
Mm-hmm.
clicking on properties, and then common, show object descriptions. Make sure it's turned on. So show object descriptions, properties,
Mm-hmm.
show object descriptions. So if you want to remove,
Okay.
then you see they have removed. So you have
Mm-hmm.
to make sure it's turned on so that you can be able to just, again, you don't need to display even this. So let's see how you are able to draw support and resistance levels. So for us, it's quite simple since we use the pivot point analysis to give us an indication of this support and resistance. So you look at the recent data to draw the lines. So the more the lines that touch a particular zone, for instance, we have seen the USD card. Again, I just mentioned this trading range is still intact. You see whatever is happening currently. So this is what I mean. This is what I mean here. So we're saying you should look at the recent data. Look at the recent. This is the last 3 weeks. Look at the recent data to draw the support and resistance lines. So the more of a line, for instance, you can see this resistance level 1, resistance level 2. These two lines. This resistance level 1, resistance level 2. So these two lines, the more the lines that attach a particular line, then it is a better resistance. So we draw it by connecting the straight line, connecting the higher lows and extending it into the future. So going into the future, we're able to see again these, so we can be able to predict where the highs will be printed. So, and again, trading in a ranging market, it's the easiest money available to you since you are able to predetermine ahead of time when you're going to enter or when you're going to exit your trades. So there are two kinds of movement that are particularly useful for picking your entries, and we're going to see these. So these two movements are, we're going to start with a drawback. So a drawback, so if a bullish break, for instance, we have this uh, support level 3. This is the maximum support level 3. So we have these lows along this zone. So if a bullish break above the resistance, so we have this previous zone that acted as support. So on this particular instance, this particular instance, it acted as a minor support because it paused the trend, and then the trend had a pullback move, and then we came and the prices break below this support level 2, and then on this major support they're able to reject. So we had the lows on this major support level, and then this particular zone which previously acted as a minor support, you can see on all these instances, here it's acting as a minor, it's causing the trend just to pause a little bit before we can go to this major support. So if the bullish break above the resistance occurs, then the prices fall back. For instance, see this break, and then these prices fall back. So this movement is what we are considering as a throwback move. Okay, so this previous zone then now acts as a support on this particular instance. It was a resistance here. You see prices come here, and then they stop going upwards. So it's shown a tendency to stop rising. So we have this resistance, but on this particular instance, prices break this resistance, and then we have this throwback move to the support level. Now the zone which previously acted as a resistance now acts as a support, and then trend continues to go up. So that's a throwback move. So we have the vice versa now is a pullback move. So this is where you take these throwback moves is where you want to take your long positions if you're bullish in such a market. And then we have the opposite of that. That's I hope that's clear. So let's have a look at currently whatever is happening on the USD Canadian. So let's have a look at the USD CAD. We are at the maximum trading range for today. So when we are stepping into this trading day, we already have the trading range for the day. So the trading range for the day is support level 1 up to resistance level 2. That's the trading range for the day. So again, you can see the way prices come to these particular zones, and these zones are quite self-fulfilling, and you can see the way prices obey these zones. So you're able to pick your entries and your exits based on these support and resistance zones, and just understanding the basic principle of how to identify a trend. Okay, again, you need to consider the kind of candlesticks that are forming along this. You can see some kind of indecision candlesticks along these support and resistance zones. You can see indecision candlesticks because this is an area where buyers, the bullish and the bearish guys, are actually fighting to see who's going to have that control of the market. So it takes effort to take your entries quite early. So you need to believe in your winners, believe in your trades, and trade your trading plan, guys. So you can see on these particular zones, we have this indecision candlesticks before the trend actually now resumes. So yeah, so again, you need to consider the worst case analysis. So you analyze potential consequences before making any decision along these support and resistance zones. Again, keep telling yourself that whatever happened in the past, whatever happened in the previous support and resistance zone is of no importance to whatever to the trade that you are in right now. So don't program yourself to always. So prices are going to react differently along these zones. So you're going to make hundreds of decisions along these zones. But again, I want you to discover how powerful these particular zones are on all these pairs that we have been looking. So if you are shorting gold, you are selling gold actually at a good price today, and you can see you're able to make about 200 pips on this particular one. So with a good capital, you are able to just go, if you're able to hold just these pips using a good lot size, then you're able to achieve that to get now in the first lane, as I was telling you guys. So that's it, guys. So that's it. That's on the support and resistance levels. So I hope we have been able to identify how we identify the support and resistance levels. And again, we'll see combining now support and resistance with the pivot point analysis in our next sessions, how we are going to develop the trading strategy. Again, you need to be in the market to see how prices are reacting in these particular zones. So you need to have that market presence. Again, you have seen. So you need to create a habit, and no habit starts out automatic. So you need to have that deliberate period where you must consciously apply yourself to make certain behavior your default. Create that time you're just in the market. These kind of gains don't come easily, but you have to create that time in the market. You see, this is on today's profit, you can see. So 887. So again, according to my trading plan, I know whatever I want to achieve in a day. So according to my trading plan, I'm okay with this kind of margin. So again, compounding these gains, and then you're able to scale up. And yeah, so again, guys, so I'll send you guys the link to sign up for the funded accounts. Again, keep at it, guys, and let's engage, guys. It's a team sport. And so let me know how we can improve on this. Yeah, guys.
Yeah, thanks. You may understand everything, Kev. Thank you, man.
Sure, bro. Thank you. So again, it's a habit.
So okay.
Yes.
Pardon?
Yes.
So to send the link WhatsApp or where? Telegram or WhatsApp?
I'll send you guys the link. I think it's better we just keep it on Telegram for now. Yeah, so
okay.
But yeah. So I'll send the link on the Telegram channel. I'll send the link.
Okay, Kev.
Yes.
Yes, I have a question.
Sure.
So from the candlestick analysis, of course, you said that the time duration is 4 hours, right?
Okay. Yes. Okay. Hello.
Yes. So I wanted to understand.
Yes.
Okay, from an analytical perspective, is there or this is a standard time frame that we usually use, the 4 hour duration, and is it dependent on the market in which you want to play in?
All right. It's a good question. So let me go back to the slides I've sent you. It's actually there. I have said it's on the trading rules. It's on the trading rules, and I have clearly indicated that what's important is you need to consider multiple time frames. So you need to consider multiple time frames since you want your trades to be aligned with the trend which is currently in control of the market. So in a particular month, we are going to be in a bullish situation. So in that particular month, we are going to have a particular week where the market forms a high, where the market forms a low. So it's up to you now to identify in a particular week. In a particular week, we're going to have a day that the market forms a high and a low, such and such. So now you have identified the trend. For instance, we can have a look. So again, we want to look at a pair like gold. So in a particular month, for example, this month, you see we have been bullish. Green candlestick is bullish. So we have been in a bullish market. So when you go to each particular trading week of that month, you want to consider bullish positions. So this week, you want to consider placing your buy positions. So where do you take your buy positions? Along the support levels. Okay. So if you're trading on the daily, then you want to position yourself and look when will be the prices coming along this. If it's a 4 hour, then I'm on the daily. How do I look along the support level? So again, we have the support level on the daily. So on the 4 hour support, you can see it's on the daily, you can see the support. Again, on the 4 hour, you observe how this fractal support indicated to us. So if you want to align yourself with the buy position, then you look, you combine those multiple time frames. All right. So now in a particular day, now you go narrower to the 1 hour time frame now to see the trading range. All right. So in a particular day, now you know the highest point and the lowest point for that particular day. So now if you are selling, you want to sell the highest point for the day. If you're buying, you want to buy the lowest point for the day. You want to sell resistance and buy support in a particular day. Umona game.
Okay. Yeah.
So you want to,
True.
if you're trading this pair, then you want to wait for it to come to the best price. So you need to be patient. Patient. If you're selling, you sell resistance. If you're buying, you buy the support zone. So trading along this pivot point is actually risky because you get to see. So getting a time limit. So
sorry.
Meaning so again, so you combine multiple time frames. So that's it. In a particular week.
Okay, so that's understood.
So let me explain it as well. So in a particular week, we normally have 4 kinds of movements. So the first week we have the market normally forms a high or a low. So the market forms a high or a low in the first week of the month, and then the second and the third week the market trends. Market is trending, and then in the last week we have some kind of a retracement, a throwback move or a pullback move. So, but now with these support and resistance, we identify them quite easily. All right. So,
again, got it, Kevin. Thank you so much.
Okay. Some more questions, because I feel like I was able to handle. So on the next session, we look at the demand and supply zones, and now we have the pivot. Now let me know, guys, how we can schedule a call. I show you how to install this indicator. So if you're ready to install the indicator, I show you how to install this on your MetaTrader 4 platform. These pivot point support and resistance. All right. Again, you see, when we are in a range, for instance, GBP versus US dollar, we have been in a trading range. So you observe when we have this fractal resistance, fractal, showing us those higher highs. So a resistance, you connect this into the future. You see, we are in a trading range for the whole of a couple of days. So from 2nd of this month, we have been in this trading range. The trading range has been from resistance level 1 up to support level 3. That has been the trading range. So you want to buy support and resistance, and that's it. So yeah. So that's it, guys. So cheers, man. So stay tuned for more signals on the channel for tomorrow's trading session. The link I'm going to send for also XM broker, also the link is, I'm going to send it as well. So that's it, guys. So cheers.
Thank you, Kevin.
Thanks, Kevin.
Yes.